Today we're diving into Pi Coin. Yes, the one that everyone with a smartphone seems to have mined at some point. It's 2025 and Pi Coin is back in the spotlight. So what's going on with Pi right now? Is it holding value? Let's unpack it. Pi Coin, the native token of the Pi network, is currently trading at around 45 cents. But before we get into the price action, let's talk about why Pi Coin has such a strong following. This isn't your usual proof of work or Ethereum-style coin. It's mobile first, designed for everyday users, not just crypto insiders with mining rigs or deep DeFi knowledge. That alone makes it different. But price is king, and right now, things look a bit shaky. Over the last 24 hours, Pi has dipped about 3.5%. Zoom out to the 7-day chart, and it's down around 1.4%. However, the trading volume dropped only 1.5% over the last 24 hours. A big reason behind this short-term pressure comes down to supply mechanics. Let's break that down. Currently, 7.66 billion Pi tokens are in circulation, but the total supply is nearly 11.8 billion, and the max supply is a whopping 100 billion tokens. Of that, 65% is allocated to mining rewards, which means more tokens are going to enter the market over time. And just this month of July 2025, we saw a major unlock of 272 million coins. That might have worried some, worried about dilution, but Pi's supply structure is built for community growth. But large token movements like this can create real short-term downward pressure on price. The Pi Network team isn't just sitting back and watching. They're pushing forward with real ecosystem initiatives. A key example is the Pi2Day 2025 Ecosystem Challenge, a developer and user engagement campaign aimed at building real-world use cases. Think peer-to-peer payments, Web3 apps, and even local business integrations. The project's goal is to make Pi usable, not just tradable. But the community isn't blind to challenges. However, a growing number of Pi tokens are ending up on exchanges. Analysts warn that if Pi drops below the key 40-cent support level, we could see a steeper correction. That said, others believe Pi's massive user base gives it staying power, even during rough market patches. It's worth noting that Pi's success hinges on adoption. If those apps and use cases being built today catch on, demand could grow. But if it remains just a, quote, mind on your phone novelty, traders may lose interest. Moreover, token supply is a wild card. How the Pi network manages unlocks, reserves, and incentives will play a big role in whether price remains stable or slips further. And then there's regulation. Like every other project in 2025, Pi has to navigate a shifting legal landscape, especially as it scales globally. So, why does Pi still matter? Because it's accessible. No fancy hardware, no massive upfront investment, just a phone, a few taps a day, and you're in. That's the kind of on-ramp crypto needs if it's going to reach the next billion users. Pi Network has always said it's about utility over hype, and in a market full of meme coins and vaporware, that's worth watching. But make no mistake, this next phase for Pi to go from hype to actual value depends on real-world use, healthy token management, and how well they navigate the next wave of regulation.